The U.S. just hit one of the largest deficits in history. What does that mean for your financial security? Today, we're unpacking the data and exploring why gold just might be the best safe haven in these uncertain times. To kick things off, last week the Treasury Department confirmed that the federal budget deficit for fiscal year 2024, which ended on September 30th, hit a staggering $1.8 trillion. This marks the third largest annual deficit in U.S. history. What makes this deficit even more striking is that it happened during a year of economic growth. The only fiscal years with a higher deficit were 2020 and 2021 during the height of the global health crisis. What's even more remarkable is that this massive deficit happened despite the Treasury collecting record receipts of $4.9 trillion. With spending soaring to $6.7 trillion, even $5 trillion in revenue wasn't enough to keep our government from sinking further into debt. In fact, the gross federal debt has ballooned by $2.3 trillion since the end of fiscal year 2023, now sitting at a staggering $35.7 trillion. As you can imagine, that news didn't exactly go unnoticed by policy analysts. In fact, Maya McGinnis, president of the Committee for a Responsible Federal Budget. Wait a second. Committee for a Responsible Federal Budget? That sounds like an oxymoron. Anyway, she had a few choice words to say about it. We're borrowing nearly double the amount we borrowed annually before the global health crisis, and this is projected to grow indefinitely. This is no way to run a country. And here's where things get even trickier. One of the biggest challenges right now is just the cost of servicing all of this debt. In fiscal year 2024, the Treasury spent $882 billion on net interest, making it the second largest federal expenditure after Social Security. In fact, more money was spent servicing the debt than on defense or Medicare. Another eye-opening aspect of this deficit is its size compared to the overall economy. Right now, the deficit is about 6.4% of GDP. For context, that's 73% higher than the historical average over the past 50 years. And it gets worse. According to the nonpartisan Congressional Budget Office, the deficit numbers are only expected to grow from here. The CBO currently projects that the deficit could grow to $2.8 trillion by 2034, making up nearly 7% of GDP. They also forecast that the gross federal debt could hit $57 trillion by that same year, an increase of 60% in just the next decade. And here's the kicker. No matter who wins the upcoming election, America's fiscal outlook is only expected to get worse. In a note to clients, Terry Haynes of Pangea Policy, a macro policy forecasting firm, said, "There's self-evidently no desire from either campaign to talk about fiscal, debt, deficit at all. With the fiscal outlook appearing worse by the day, some analysts are now suggesting that gold might be a better safe haven asset than government bonds." As of last week, gold was up 32% for the year, trading above $2,700 per ounce. Many strategists have credited gold's strong performance to growing concerns about the U.S. fiscal situation and what it could mean for treasuries. Earlier this year, Christina Hooper, chief global market strategist at Invesco, said, "The safe haven asset class of choice has become gold rather than treasuries. The bigger theme is just the concern about a lot of debt and concern that the fiscal situation in the United States is unsustainable. It looks like more and more strategists are jumping on board. In fact, just a few days ago, Bank of America analysts had this to say. With lingering concerns over U.S. funding needs and their impact on the U.S. Treasury market, the yellow metal may become the ultimate perceived safe haven asset. If you haven't bought gold or silver yet, here's something for you to consider. It's not just that central banks are finally sharing their insights about gold with us. It's about time. They have been stockpiling gold for quite a while. What concerns me is the serious nature in which they are discussing fiscal irresponsibility, our debt, the direction of the dollar, and global economic instability in general. So if you haven't bought gold or silver yet, maybe it's time for you to take a serious look at it.